Doom, 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 diddle-ding, diddle-ding. Oh, wait, we're live. Hey, everybody, Economic Ninja here. Well, it happened. It happened. Not that there's anything wrong with the economy. Put that there. Well, we've been downgraded. Yep, that's right. The big old by Fitch. And I got to be honest with you. I got to give credit to Fitch. Let's give credit where credit is due. Fitch, it is official. You have just made it to the Ninja's top three. No, you are the top dog. How do I put it? I don't know. Do I have a trophy? Everyone gets a trophy in this world. Okay, you have made it to the top of the list with the 3 credit agencies. Why? Because you were a leader. You were ahead of the pack. You were where all of us said you should have been a long time ago. And that is the U.S. debt is not secure. There's not good things with it. But don't worry, we're going to go over a handful of news stories today. There are lots of people like the top banker in the country, Jamie Dimon, saying it's ridiculous. The Treasury president says this is a complete surprise. It's very interesting times. And then I've been told I've got some kind of announcement from the president himself. So we'll be waiting for that. All right, here we go. So let's do a few. Well, you know what? Let's look at the markets right now. We're live. Let's see where we at. Dow Jones down 344 points. It's okay. No big deal. Bonds. That's impressive. We're at 4.069 right now. Boy, those 10-year bond. The mortgages just keep getting more expensive. Oil down nominally, $79. Gold down. Wait a minute. Everything's down? This is weird. Okay, so let's go to the head stories. Well, why shouldn't it be down? It's not like every day the U.S. debt gets downgraded. Let's start with Treasury Secretary Janet Yellen. This is the lady that in 2017 said that we will never, ever, ever see a crisis like we did during the Great Recession. Now, she should know everything because she has worked for the Federal Reserve since 1977, and now she runs the Treasury. So she should know everything. So when she says, don't worry, she was wrong? Oh, that's right. Banking collapse happened this last spring. Okay, copy. All right, cool. So she's wrong. The talking heads seem to always be wrong. Okay, let's do this. Treasury Secretary Janet Yellen called Fitch's credit downgrade surprising. I bet she was surprised. She was like right about to check her oatmeal cookies, getting them right out of the hot oven. She was going to serve them up to all the other bankers. Nothing to see here. And she was surprised by this fact that Fitch has downgraded U.S. debt. She says it's surprising considering the nation's strong economic recovery from the COVID pandemic. And yes, it is a strong recovery. I heard Presidente Jeff Borgen, which we're expecting an announcement from him any second now in the Ninja newsroom, that we were strong. We're not in a recession. We just simply changed the definition of a recession. We also changed the definition of a strong economy. That's, when people are losing jobs, interest rates are skyrocketing because inflation's out of control. That's a strong economy. Yeah, it says Yellen touted recent robust U.S. economic numbers, the numbers they fake, and said Treasury securities remain the world's preeminent safe and liquid asset. Wait a minute. What happens to an asset when the world used to use it all the time, but then starts throwing it out the window saying, we don't want this, we're choosing another currency, maybe the yuan, maybe the ruble, maybe a basket of currencies. And I think they're talking about making that basket of currencies backed by gold, redeemable in gold. That's weird. It says here, Treasury Secretary Janet Yellen on Wednesday denounced Fitch's decision to downgrade the U.S. long-standing credit rating that caused stocks to tumble. See, it's everybody else's fault. It's not our own, right? It's not her fault. She just runs the Treasury. It's not her fault. It's somebody else's. Yellen, who spoke during a visit with Danny Werfel, Commissioner of the IRS, the guys, the top crooks, the ones that want to take all our money. But that's okay. They got the 60,000 or whatever agents for the rich people, not for you. Just like the 1%. That's all they're going to mess with, 1%. Just like they talked you into income tax in the first place. The commissioner of the IRS called the move surprising, considering the nation's strong economy. All right, next story. Let's do this. Let's go to a little zero hedge right now. What are you talking about? What? Oh, he's ready for his announcement? All right, cool. Let me type in. I was just going to the president. Okay. What do you mean he wrote it down? On that? I didn't do it. Trump did. Signed the Prez. Dang it, I thought I had an exclusive. All right, here we go. Check this out. Out of Zero Hedge. You can't make this stuff up. Biden blames the U.S. downgrade on Trump. That's right, the last guy. He did it. You remember the first thing Biden did when he came to office? It wasn't any of his promises. I guarantee you that, because those are all fake lies. But what he did do is he says, we don't really like this U.S. energy independence thing, where we pump oil out of the ground, we employ Americans, and then we use the oil in our own country. It's sort of like what Mexico does, right? Where they just sort of use their own stuff and fuel's real cheap. We don't like that. At that point, oil was just record lows until COVID came in. And then after the COVID's lows, they were still low. They were super low. Things were great. Fuel was low. But all of a sudden, that changes. And let's just buy from Saudi Arabia. That was the first thing he did, right? So none of these things that he did is the reason why we're in these situations right now. It's the guy before us. All right. The new regime talking points are out. Let me ask you this really quick. Just a quick poll. Type 1 if you think this is Trump's fault, the credit downgrade. And type 2 if you think it's the current administration's fault. I'm just curious to see what you guys think, okay? 1 if it's Trump, 2 if it's the current administration. Let's just see what you guys think. The new regime talking points are out, namely that Fitch downgraded the U.S. credit rating from AAA to AA+. That's a big move. I'm going to be honest with you. You go from the top to down a little bit. That's all it needs. That's just all you need right there. On Tuesday, because of MAGA Republicans, all things Trump. I'm just reading this stuff. I'm just the bearer of bad news. But while Fitch cited the expected fiscal deterioration over the next 3 years, and I'm going to get to a story that's very serious, and it has to do with this. A high and growing general government debt burden and the erosion of governance related to AA and AAA rated peers as reasons for the downgrade. The Biden administration is, of course, blaming Donald Trump and his supporters. Like, seriously, you guys are, it's you and me. Due to one portion of Fitch's explanation, a steady deterioration in standards of governance over the last 20 years, and that repeated debt limit political standoffs and a last-minute resolution have eroded confidence in fiscal management. Wait a minute, 20 years? That means Joe Biden's ex-El Presidente Obama is involved in that. Matter of fact, I think Bush might have had something to do with it too. No, it's Trump. That's what they want you to believe. Now check this out. Now they're talking about, Fitch is talking about expected fiscal deterioration. Check out this story here. Yields are surging on bonds. That's not good. See, every time the Fed raises rates, bonds go up. When fear moves in, bonds go up. When bonds go up, the bonds purchased earlier at lower interest rates, lower yields, they lose value, right? Now, there's a lot of people that have bonds. There are a lot of institutions. There's a lot of banking cartels that have bonds, quite frankly, and they're taking big losses. They're not selling just yet, but eventually they're going to have to when we hit a liquidity crisis. Now, check out this story at a Zero Hedge. Yields surge after Treasury boosts auction sizes. Now, like we were saying this, check this out. Here's a super chat. I'm going to read it real quick. Going from AAA to AA credit downgrade means that your country's debt ratio proves that you cannot even pay the interest on your debt. The reset crashes here. Absolutely correct, Saline. Absolutely correct. See, everybody on YouTube is saying, "Oh no, we're gonna have a soft landing. Oh yeah, we're gonna get through this just fine." When was the last time we saw our country's credit downgraded? Think about this. It don't happen every other day. And here's another great comment. Check this out. Knife Collector says, isn't raising interest rates to combat inflation while printing trillions like taking a drug to counter the effects of another drug? Now, what's important about that is that a lot of this money that's been printed, we haven't seen it circulating. We have not seen the velocity of transactions or the velocity of money increase. So we have not seen the hyperinflation that would have been prior to the Fed moving in during the 2008 crash, turn into hyperinflation. See, without velocity of money, if they park that money somewhere, and where they parked it is buying a lot of publicly traded companies and assets around the country, without you seeing the effects of the inflation, now you're starting to see this, right? Now it says right here, yield surge after Treasury boosts the auction size. Now what's very, very important, thank you TJ, that you need to understand this. This goes right along with what Fitch is saying. We see in the future, you printing more money, getting even more reckless. I'm paraphrasing here. It says they boost the auction size more than expected, and they sees debt issuance tsunami on the deck, and I completely agree with that. Let me give an example of a debt tsunami. President Joe Biden and his, I don't know, whatever she is, vice president, they're on the campaign trail right now trying to buy your vote. And one of the ways they're buying votes is they go to the biggest pool of people that have a say in this country, have a vote, and those are people that are seriously indebted in student debt, okay? By and large, these are people that are part of the workforce. They went and got massive student loans, took them out, got a degree, they're working somewhere. A large percentage of people that have student debt are currently working. There are some that don't work right now. What they're doing is they're trying to bait you and pull you and hook you by saying, we're going to do anything we can to get rid of your debt. We're going to wipe it clean, essentially buying your vote. They knew they couldn't pull it off. So when the Supreme Court said, hey, you can't do that. Courts say, nope, can't do that. They come over, okay, we can do this, this, and this. Showing they're doing everything they can. They put out those tweets, we're doing everything we can. They're trying to buy your votes. How does that money get there? Well, at a certain point, the government's got to borrow it. Because right now, as it sits, the way that student loans are set up, it's one of the largest assets. Ironically, it's debt, but since there's payments and interest that come in, it's one of the largest assets on the government's books. And so every time they forgive a dollar, they've got to replace that dollar because we run on deficits. We spend more money than we take in taxes. All right? Fitch, Moody's, and S&P know this. And I wouldn't be surprised if you saw a secondary downgrade. However, I'm sure that the CIA is knocking on the doors of all those companies right now saying you better not follow Fitch's thing. But my point is that I believe that I'll bet you'll see in the next 90 days a secondary downgrade from another company. And it's because they see that every time the government gives the public something, they've got to get a dollar back. They got to either squeeze you more in taxes, which are pretty much at the breaking point. Type 3 if you're at the breaking point when it comes to taxes. With everything that's on you right now, just type 3. I'm curious to see how many people are just literally focusing on taxes and trying to figure out how to pay less tax. Because I don't think this is just a little problem. I think we're close to the Boston Tea Party kind of reaction to taxes. It says here, when looking at the latest Treasury debt estimates, we showed that the U.S. predicted a near record $1 trillion in debt sales in the current quarter. Come on in. It's a big deal. And $852 billion from October to December quarter. Numbers are so staggering, they are usually associated with economic crisis. Now, here's the thing. You guys know, I've been warning about this for quite some time. And a lot of you have been with this channel for, I think we just turned 3. We're growing up, a baby. Point being is that I've been warning about this. And there are things that are happening right now in our economy that has never, ever, ever happened in 2005, 2006, all the way up to the recession and after, okay? We've never, ever seen this. We have went from pandemic lows in interest to even seeing negative rates around the world. There's someone I know personally that has a negative mortgage rate in Denmark. Pretty crazy, huh? Thank you, Betty, for the super chat. My point being is that we've seen supply chain crisis all around the world, and yes, this is a global thing. We have seen the world split into two, the BRICS nations and the West, right? Two complete economic systems right now being torn into two. Where you had globalization, you now have a power struggle and a tearing of two. All right. Now you're seeing one of the major credit agencies, rating agencies, downgrade our U.S. debt. Sure, it's AA. Cool. We haven't hit junk status yet. My point being is that is a shot across the bow. Now, as outside countries that take on our debt, right? That's how we export inflation. We print dollars and give it to someone so that they hopefully park it and don't use it. They keep it for safekeeping. They start to see this internal battle in the U.S. They go, wow, even the U.S. own credit agencies are downgrading their debt. What is it more than likely going to cause them to do? Well, I can tell you what it's going to cause them to not do, and that's stock up on more dollars. Thank you, Suzanne. I appreciate the super chat. My point being is that as you see this tumble more and more going into this fall, layoffs like crazy, and we have really solid layoff data, like freight companies, shipping companies that are collapsing right now, right? We've already went through the tech layoffs and the mortgage layoffs of December, January. We're now into freight, and next will be hospitality. A wave of hospitality and vacation, travel and leisure layoffs that you have never seen before are going to hit this fall going into winter. Why? It's because it's seasonality and because we've hit the breaking point, right? We've seen things like bubbles, like Airbnbs, short-term rentals come out of nowhere. We've never had these in the history of our country, right? Little mini hotels shot up all over the country. We're now seeing them literally being made illegal by municipalities. We are seeing so much pressure on the economy right now that if anyone, I mean, it's laughable that someone would sit there, oh, this time's different. I'm like, you're so blind. Oh yeah, real estate's not gonna crash like it did before. I'm like, who's gonna buy the homes? Oh, well, and all they do is this, same thing. Well, the one down the street from me sold. I'm like, yeah, like my town has like 4 homes for sale. Normally, we have between 28 and 50 at any given time in my area. This is insane. Yeah, there's a sucker born every day, but also something that we haven't seen in like the last 30 years, the government reclassify what they view as a government-backed mortgage, going from a 30-year to a 40-year. Absolutely insane to me. We have seen so many things in the last 2 years since this new presidente took office. You know, the guy that's blaming Trump for this downgrade. Yeah, it's Trump's fault. It's insane. You know, this is the guy that literally changed the definition of recession. Oh yeah, no, it's not what it always was. This is the new definition. It's like, wow. And what crazy is because all the mainstream media is bought and paid for, that's really all the sheep will see. They're just eating their pot. And it's like, you gotta wonder how people can't see. And I think you see it. Type bigger if you think this crash is going to be bigger than the Great Recession. Type smaller if you think it's smaller. Type soft landing if you think it's soft landing. I'm curious what you have to say, but I believe this is going to be way bigger than 2008. Not only because all of the numbers, the blown up assets are worth more, the debt is more, but because of anomalies that we have not seen, honestly, since a time between 2018, I'm in this millennium, 1918 and 1932. From the Spanish flu and the Depression of 1920. And if you don't know what the Depression of 1920 is, please go look it up because it's so important. Because that was your 2008 moment, right? And then we've got the big bust, the Great Depression, the crash of 29. And we're in the midst of it right now. And that's why I just did the video on the structure fires that you're about to see across the country. Commercial structure fires, commercial residential, commercial. You're going to see all of these fires because the real estate market's tapped. The debt market's tapped. Everything is tapped. And so now is not the time to be going out and getting into more debt. Now is not the time to be going and on frivolous vacations you can't afford. If you can afford it, go for it. Time's short. But I'm telling you, time's also short if you don't have the money to do it, and you're going to miss out on the greatest opportunity ever to build wealth. And that would be a shame. I missed my opportunity in 2009 for that winery. I will not make that mistake again, guys. I'm telling you right now. I will be on the forefront, leading the charge, and when it's time to charge, we're going to be buying up real estate like it was going out of style. Hope you got something out of this. This debt grade, it's a big deal. It's also a big reminder of our noses should be on the grindstones, saving, getting ready, preparing for this big turn that starts this fall. All right, guys, that being said, the Economic Ninja is out.